especially with the amount of lending. It's like the bank ramped up lending over the past 2 years to these developers, and that explains why they came out and did this blanket appraisal bullshit. Because if you think about that blanket appraisal stuff, well, the bank is not going to do that unless they need to do that, right? They're not going to say, oh yeah, we're going to appraise everything above value, because that's a huge risk to have on their balance sheet. And they know that that's wrong to do something like that, even though banks do shady shit the time. It just shows that something is really going wrong under the hood in the banking system. The Canadian housing market is crashing, and I've got my good friend with me, John Flynn, to talk about everything that is going on. And the spring housing market, it was a complete show. So, John, what is going on, and how are you making out with this real estate debacle that is happening?
Well, yeah, thanks, Luke. Nice to see you. And the sentiment has definitely changed in Canada. Like, there's no denying it. And I think I said this before, but now, I don't think there's anybody left in this country that's thinks real estate's going to go up anytime soon. The market has changed, and yeah, talk about crashing. We never saw a crash in 2022. That was a blow off top with those prices, and people think that was the crash. It wasn't the crash. The crash has been a slow trickle since then, but at any point there's going to be fear in the market, and yeah, it's over from there.
Yeah. I posted on X this morning. I want to show you this because it's kind of interesting as well. And then we'll go through some of the data that you have, which is fantastic. So it's the fastest and biggest crash in real home prices. So this is adjusted for the CPI. I compared it to all of these using the index from Fred, because we don't even have decent charts like this in Canada. You have to go to the US to get the decent charts.
Yeah, you know how many times I go all the time to Fred to get data. It's crazy. You can't get it in Canada, but there's the US has it, right?
Yeah, exactly. And the crash has really only just begun in 2022. But if you look at all of these, 2008, 2009 was an exception, just 1 year. But the other crashes that have been seen were 8 and 9 years in length. So what do you think of that? Do you think we could be in for the long haul in terms of this?
Definitely. Most people understand this at this point. We are in for the long haul. This is going to be a long cycle, just like the 90s was. I would say, if you remove that blow off top, it was probably from December 2021 to February or March 2022, when they should have been raising interest rates before that. But that was just a few month blow off top, which added an extra $100,000 onto the average price in Canada, right? So that should have never happened. But if you take that off and then do your calculations, it changes everything, because look at 23% from there. But so that's what I'm saying. We haven't even experienced a crash yet. It's just the blow off top is done, and we've been trending sideways, slowly moving down, but we have been trending sideways. And now it's going to get interesting with the unemployment rate rising and all these things happening, and the sentiment, right? And the market has changed in Canada. And we see that in the numbers, right? We have record high population, 41, 42, who knows? Actually, we don't even know, because the government lies about that too. They tell us there's 800,000 new people in the first 4 months, and then they say there's only an 18,000 person increase. What is it, 18,000 or 800,000? But yeah, so again, we're still at record population in Canada, and we're at record low sales. So it just shows you how bad things are. And that strategy probably did work. Delay this crash, because adding more people, adding more money to the system, it's just stimulus, right? But they use it in the form of people.
It's true. And the other thing is we can't continue to bring you this content without our video sponsors, and today's sponsor is PawnsApp. We all know the economy is in a dark place right now, and a lot of people are struggling to pay their next bill. PawnsApp could actually be a solution for that problem. It's one of the easiest ways to earn cash online right now. You can do it in 3 simple ways. You can do it by taking quick surveys, by sharing your phone's idle internet, internet connection and also by just playing fun games. And the more people actually withdraw from the app, the more people will earn. And yes, this is an app where you can actually withdraw the money that you earn. And if you don't believe me, just take a look at their reviews on Trustpilot. They've got over 6,700 reviews and a rating of 4.4, which is impressive. So please use my special link in the description to sign up below. It helps support the channel. Download Pawns app today and start earning money, start cashing out, and start earning extra income. Thanks to Pawns app for sponsoring this video. It's true. And, you know, the other thing is like all these condos right now that were meant to go to international students, probably Airbnbs and stuff. A lot of these are completing, and the people who bought in like 2020 in a completely different environment to what we're in right now. I mean, there's nobody who want those shit apartments that are like 400 square feet and it's basically just a hotel room, and there are just towers full of them. And I think like the condo market is a big risk just on its own without the rest of the housing market, because it's the same that's happened in Vancouver as has happened in Toronto, and even in Calgary to an extent. There's still loads of developments that are going to be coming online and all these investors bought into.
Yeah, the condo market, that's an interesting one because there's so much inventory, and developers, like you hear it now, they're going bankrupt. They're like using their existing units that are unsold and you know, financing those to keep the project alive. And it's just not to continue the project, that's just to keep it funded. And of course, then you have the banks with the blanket mortgages. And, you know, there's some pushback on that, I think, lately too, because it's against the rules and against our financing, our mortgage rules to like 100% finance units. But this is what they're doing. So they're like skirting these mortgage rules to fund these units that are below what they sold for. So yeah, there's a lot of stuff going on, a lot of people trying to tread water right now in Canada, trying to keep things afloat. And you hear like I just every week now you hear something. I was just looking at something this morning, and I think somebody posted it, Steve Saretsky or something in Vancouver, and yeah, they're like lobbying the government now, the developers, to have to allow foreign buyers to start buying these condos again because they're not selling, right? So they're like, let's sell them to like can we allow the money launderers back in to buy these units? Like it's crazy, but this is how desperate they are.
Well, yeah, and you know what? It's a good point that you're making there, and I want to zoom out a little bit from the Canadian housing market and talk about what's going on in Mexico, because in Mexico, their market, especially in the Riviera Maya and all these tourist hotspots, has been driven by foreign investors, and that is absolutely tanking right now. I saw that like in the Riviera Maya region, like Cancun, Playa del Carmen, Tulum, there's now like a 70% drop in the amount of people that are buying foreign investors, because they have to create these trusts to buy property near the ocean in Mexico. So basically the banks track that data on how many trusts are being created, and it's dropped like 70%. And now there's all these buildings that are basically vacant, and it's just turning into a complete show there because of Airbnb and the oversupply. But my main point is, like, if you zoom out of Canada, everywhere foreign investment is tanking. So they might be lobbying the government, but are there any foreign investors out there? I mean, all the Chinese people that were buying their condos in Vancouver and stuff, they're being burnt back home on real estate there. So are they going to come to Canada, especially since they've been blamed for like the whole housing crisis, either correctly or incorrectly? So I don't know. Like, if I was a foreign investor, I would say no thanks. I'm going to go park my money somewhere else that's a little more stable.
Yeah, and it's you don't have to look far. Like, if somebody says Canada's a great place to invest, our real estate's, prices are super high, like, it doesn't take long or much reading or research to look at this developer's going bankrupt, and condo sales are at a 20-year low, and you know what I mean? Like, there's so much information out there. You're not gonna, like, literally you'd have to have like one person lying to you telling it's a great investment and you to look no further, which does happen, mind you. But again, there's just so much information out there now that says that talks about the reality of the market, and you can't deny it anymore. And all the lies we were told, like how many lies did we hear in 2023 and even 2024 about like the market's going up this spring, interest rates are coming down. I want to know how many agents got fired or their clients are never going to talk to them again, like for buying these. Well, I could probably just look that up with the number of sales, right, from those years. But like that's the way it is now. And so yeah, Mexico, that was a huge bubble too. Like their bubble, talking about percent increase, I think it was like way bigger than ours, right? They went like 5x or something in prices, or I don't know the exact numbers, but I talked to somebody down there. They were reached out to me, an agent from there, and of course they're looking, for sales and stuff. But he said the market was still hot, and that's down in the Yucatan Peninsula. And I don't know, I haven't done my research down there, but the prices are like inflated. It's like $1 million for this place in Mexico, and it's not even on the water. I'm like, this is not a good deal. And the electricity is like $500 a month if you want AC or something. Like it's crazy. Yeah. But now you're seeing all this. Like people are just gonna. It's the money's running out, it's drying up. But everybody, all these companies and countries and everywhere, they need so much more money, but they're too late to the game. And I'll give you one example. I want to go cruise in the Bahamas, right? Like boating and stuff in the next year or two. And the cruising permit, it was $150, and then it went up to $300. So it was at $300, and they just changed it to $800 for one-time entry fee. You can stay there for up to 6 months, I think it is, but just to get in. And again, so like they've like raised their prices like 2.5 times what it was. But yeah, everyone's just desperate for money, and yeah, we'll see what happens. But it's running out, and the sentiment's changing, and it seems like Mexico isn't going to get away either, because their prices are astronomical.
It's crazy.
I couldn't believe, like, I'm thinking like 200 grand, you're going to get a nice place in Mexico. It's like 400,000 US. It's even more expensive than the US, it seems like.
Yeah, and the returns are just not that great either. And your only option is Airbnb. You can't get long-term rentals, so you're totally dependent on one platform for your rental income. And if regulations change, like is happening everywhere for Airbnb, so many cities have banned it, then what's going to happen to that? They're just going to completely lose that income. So I'm just going to share my screen now so you can see the freehold sales and what's going on. John has shared a load of data with us today, so thank you so much for doing that. And also check out John's YouTube channel. You all probably follow him anyways, and also check him out on X as well. He's always posting charts like this and good stuff. So with the freehold sales, is this for the Toronto area or just entire Canada, or what are we looking at here?
This is the Toronto Real Estate Board. This is freehold sales. So this represents, there's 75,000 members on the Toronto Real Estate Board, and 95,000 have access to the Toronto Real Estate Board. So even though you're not a member, they share their system. So this is 95,000 agents' data, and there's 160,000 or so, maybe 165,000 agents in Canada. So this is more, at least half, or if not more than half, the agents' data in Canada. And this would be for majority, about 75% of Ontario. So again, half the data of Canada is right here. And so this is freehold. Now everyone talks about like the condo crash, and I know you love talking about it too, but it's not just the condos, it's the freehold. And I want you to, we're gonna go on a couple of slides, and I'm gonna point something out. But here you can see the number of sales. Of course, look, in 2021 it was the peak, and there's a lot of people that speculated in 2021 that are losing money right now. And as you go down, we're seeing every year we're seeing lower highs to those number of sales, right? And so this year, our highest month of sales is still lower than it was in 2024. And if you can look at just June there, we're almost as high as last June. They had 11,519 sales. We were just under that. But for the year, our yearly high is lower by the month. So yeah, like sales are, again, we have, compared with 2020 or 2021, we have how many more people now? Like a lot more people. Look at the beginning of that chart there, that line chart, and you can look back actually in the numbers there. We go back to May 2020. If you look actually at the data there, was what, 10,604 sales. That was like the peak of the lockdowns, like pretty much, right? Actually, maybe we came out of lockdowns during May, but we were still in lockdown for the majority of May, and we're not much higher now than we were in like the friggin' lockdown. So it just, again, and our population now is is 3 million more approximately, if not more. So
Yeah.
it's a huge change there on the freehold. And we're going to look at the condo in a minute, but it doesn't look much different than this. So freehold's getting killed too, because the price of freehold is unattainable for many people, right?
Well, yeah, exactly. One thing I'm also noticing there is like we set a new low there in sales in January that was lower than even April 2020. So you've got sales that are low. Oh no, wait, we did go lower than that in 2023 in January.
Still, that's like January sales are lower than the peak of the pandemic. Look at February this year, 6,600 sales, and it's like 700 more than the lowest line. February is a fantastic month. Like, look at the other Februarys. Like, some of the Februarys we have are fantastic, and prices start like shoot up in February usually. Not much more than the lowest low of the pandemic when you couldn't even leave your house.
Yeah, that is absolutely crazy when you really think about it. And then basically you've just got this chart, which is the freehold average sales price trending sideways, took out that blow off top like you talked about there.
Yeah, so so now, on this chart I want to point out, looking at the data for June, for all the Junes there. So this year it was $926,000, almost $927,000. Go back to 2021, it was higher in 2021 at $934,000, just by a little bit, but it was still higher by $8,000 or so. And of course, if you look at 2020, like that's the jump, right? That was a huge jump from 2020 to 2021. But again, this year is lower than any of the previous 4 years from 2021 to now. And now I want you to remember that, because people talk about the condo market crashing, but I say the freeholds right along with it, if not worse, because the price points like $1 million and $900,000. And this isn't just in the GTA. This includes like places like Niagara. So it's an average of all these places. But again, it's lower now than it was in 2021, where condos are not, and we'll get into that in a minute.
Yeah, I mean, that is absolutely crazy as well, because, considering all these people, and that was the narrative, that so many people are moving to Toronto, and a lot of people have moved to Toronto. I mean, Toronto is like where everybody goes as an immigrant pretty much, or the Toronto area, but that has not impacted the price. So that narrative has been completely blown out with this data. But also you've had like all the inflation that we had in 2021, 2022, 2023 has occurred, and the prices have just gone sideways. So they've really actually just gone down if you're looking at purchasing power. I mean, it's not a good thing. I think a lot of people thought as well, because you're looking at prices that are so high, people think that's a sign of stability. But as we're seeing, it's far from it. It's in fact the opposite.
I'm going to make a forecast while we're still on this chart here, a prediction, right? Okay. Which I don't like to do. It's been a while since I made one. So we're at 926,000. I say we're going to get into the 800s this year by the end of the year for our average price for this data for the freehold.
Yeah. I mean, probabilities are right there with you if you look at what's happened over this year so far. So that's going to be an interesting.
Well, look, in 2023 and in January, we're in the 800s. Look at December 2020, 838. We will technically be back closer to 2020 prices than any other year if we do hit that. So like it's going to happen. Like we're at 926 and 943 for the peak market in the spring, right? Like it's going below 8 or below 900. It's going to be the 800s. And it'll just and just think of the sentiment then. Like people are going to be depressed. There's going to be bankruptcies. So the bankruptcies also, and we've talked about this on this channel a bunch of times, but the bankruptcies, they pick up, and the power of sales and the mortgage arrears, they pick up later in the year. So as from now on, they're going to increase. So it's always in the second half of the year when those things always trend up. So we've seen them trend up early in the year, but they really pick up in the second half.
Oh yeah. So that's going to be really interesting. And the job market is like at its worst. It's been like in the past 5 years as well. So, I mean, it's really not a good combination. So
it's going to be a fun one.
Yeah. So this is the freehold days to sell chart, and it's trending upwards.
Yeah. So again, we're seeing the same trends that we're seeing, whether they're up or down. We're seeing higher highs highs and higher lows with this, meaning it's just taking longer no matter which time, what month of the year, whether it's a spring or winter, it doesn't matter. It's just taking more time. Freeholds at 31 days. Now that's still low, but you got to remember how many places or how many agents, especially in the GTA, they put on this house that's 1.3 million and they list it for 999 because they want a bidding war, and then it sells for like 1.25. So they're getting less money, but it's still selling in a week because they're doing this bidding process. So this is something that people have to realize too. Like 31 days is the average, but a lot of them are just like fire sailing them with that strategy, which really reduces the time. But again, you go back, look at June 2020, 32 days on market, and now we're 31 days. So again, just coming out of lockdowns, yeah, it's not good.
Yeah, that is absolutely crazy. And in January, we were up to 48, which I think is the highest. Yeah, that is really nuts. And then let's get on to the average residential sales price. Oh, you got it. Candlestick chart. I like.
Yeah, so I did some candle. This took a little more work to do, right? But
yeah,
I'm going to do it with national data because, candlesticks, I'm not an expert by any means, but they're so important to tell you really what's happening and, the opens and the closes and the high for the high. These are monthly, it's a yearly candlestick chart, but it's using the monthly data. So as our points within, of course, if you look at the white ones are when it closes lower than it opens. So the white candlesticks are December's price was lower than the opening of the year of January in that year, I should say. And then we see on the right there, 2023 and 2024, those are bearish patterns there for the candlesticks, right? Because the tails are on top, meaning they reached. They peaked higher, but look at the highs are getting lower every year, just like we see on the average sales charts. But I'm going to do this for the national data to see how it looks. It definitely shows the pattern a lot more than it does just looking at the sales data alone. So
yeah, and you can even actually see, which is really interesting, like 2019 even looks pretty bullish, and then 2020, 2021, you can see that is incredibly bullish there. And then 2022, you hit that peak smack down, and 2023, 2024 trying to test those new highs. But I really like this actually. You'll have to update this as we go on. This will be really good. So this is the condo sales and what's going on there, and again trending downwards.
So the condo sales, so so like just think about this. So 2,900 sales in June, half of Canada. Like this is like 50%, if not more. I think I had it pegged at like 60 or 65% technically, but this is more than half of the Canadian data here. And we got 2,900 sales for 43 million people, or however many millions of people are in Canada now. We don't even know, like I just said. It's a mystery. Everything's a mystery. You know what else is a mystery? The average family income, the average personal wage. We don't know anything. Like there's no data. The government doesn't want to release this data. They're like literally cooking the books on it right now for their next report. Which is supposed to be this year, I think, was 2021 was the last census, wasn't it?
Yes, 2021. That's true. And they never ever post even like a real average income. So like adjusted for inflation, they never post that data either. Like I had to create my own chart on that because one just doesn't exist.
Well, I had to go to Fred for some data as we just talked about. But there's median. They flip flop. I don't know why they do. Well, I do know why, but it's just unbelievable. Like they'll flip and they'll say, for certain years you'll have median after tax income, and then you'll have median income with not after tax. And it's just so skewed and so hard to get the accurate, consistent data over the years. Like they just keep changing it on purpose because they don't want you to know. And you really have to like look at other sources and kind of take an average of what private, research firms give you and what the government gives you. But it's very elusive data, and I wish it was more consistent. It should be like we're paying like these people, these public sector workers, like a lot of money for these jobs, and we're getting like this subpar crap. Just like I just talked about that CMHC report, and they're talking about like affordability will return, and they're just gaslighting you. Like if we don't build 480,000 homes or 430 to 480,000 homes, like we can't, affordability won't return. And they know that we're not going to be able to do that, and they're going to blame it because we didn't build enough homes. And it's like, it's not because we didn't build enough homes, it's because they printed all this this money and had super low interest rates. So I literally, and they don't talk about, so this report was about affordability. They don't talk about any other factors. They just talk about like affordability is directly linked to the number of homes, and that's it. Like, so now let's have this conversation. It's like, no, affordability is linked to government policy, interest rate decisions, all these kinds of things. But of course, they don't want to talk about that because then people are going to realize, hey, well, if the government lays a bunch of people off and stops spending so much money, homes will become affordable. But they're not going to say that. And they're government employees. They're paid. They're literally told, this is what we need to say. And I know because I do stats, but here's my message. Go get me some data or report so that we can convince people of what our end goal is. And this is what they do. And it's shameful. But CMHC, they shouldn't even be around anymore because like they're literally just like a middleman for the banks for building like rental units now. Like and for ensuring the banks don't go bankrupt because people default on their,
Mm-hmm.
high ratio mortgages. So they insure them.
Yeah.
So the Canadians, so they're like, it's a tax collector. They collect tax so that the banks don't go belly up and the government keeps collecting income tax.
Yeah. And I think this CMHC is like quite dangerous in a way because it takes a lot of the risk away from the banks. And I've had people contact me as well who've worked for CMHC either directly or indirectly. And they even say like, if there is a default and whatever and CMHC's involved, and it's like any insurance, they've got to claim on that insurance and there's a bunch of things that they've got to prove and do. So if they didn't do their due diligence on the buyer, which we know like during 2021, 2022, a lot of these banks, they weren't checking people's incomes. They weren't doing that because I had people even reach out who worked in the bank and they were encouraged like not to be checking people's incomes at that time. And I don't know if it's still like that now. I'm guessing that more now they are more cautious and they're checking up on people's incomes. And that's again probably why it's affecting sales to a certain degree. But yeah, it's like CMHC is pretty dangerous because it pulls that risk away from the banks in the bank's eyes, but really that's still there. That risk is still on the bank's balance sheet because they may get denied all those claims if something happens. Now, we all know in reality, these banks are too big to fail. And because of foreign direct investment, like the government is never going to let one of these big banks go bust. Probably let like one of the smaller banks go bust because that'll be great for the bigger banks, but not those big banks. So
no, but yeah, so like looking at the condo sales here, again, we see that same pattern, like lower highs every year trending down. You can see it. It's like a ski slope going down that data. And it's like, and look at June's sales, like 2,900. And then you have May 2020, 2,400 sales for condos during the pandemic. Like, so it's just like, and look at all of this year. We hit 3,000 in May and that was it. But every other one was in the 2,000s. Like it's been like abysmal, super low. And but again, it's going to take a while for these condo sales to recover. You got all these, and the prices are just going to like go like crash because they didn't build appealing units for people to buy. They built them for investors to speculate on. And you know how hard it's going to be to sell some of these units? Like it's going to be real tough and they're going to have to just give them away for like way below market value, current market value, which is, again, it's an overestimated value. Or I don't know how much lower these can go, honestly. I keep saying they can't go any lower and they keep going lower.
I think that's where a lot of the and the fraud that went on could be exposed in this because we've all seen the stories on X of people like new immigrants who've managed to buy these pre-construction condos, all these people who can't complete, and like to a certain extent the developer can try and go after them legally, but if they are screwed because their costs, they're basically going bankrupt because of what's going on with new projects and the fact that they can't sell anything anymore. It's just going to be really interesting to see what goes on there, especially with the amount of lending. It's like the bank ramped up lending over the past 2 years to these developers, and that explains why they came out and did this blanket appraisal bullshit. Because if you think about that blanket appraisal stuff, well, the bank is not going to do that unless they need to do that, right? They're not going to say, oh, yeah, we're going to appraise everything above value because that's a huge risk to have on their balance sheet. And they know that that's wrong to do something like that, even though banks do shady shit. the time. It just shows that something is really going wrong under the hood in the banking system, because that sort of stuff shouldn't be going on. So they've obviously thought, well, we need to do this, because if we don't do this, the developers are going bust. We're taking a massive hit, and loan loss write-offs at the big banks are already like skyrocketing. They're in the billions, and they keep increasing their loan loss provisions. But the financial media never will discuss this, because the big banks are a major source of revenue for the financial media in terms of advertising. So it's like there is a massive bias that people don't know about with Canadian banks, that they're never going to hear these type of stories that Canadian banks are risky because everybody thinks they're safe. And to a certain extent, I do think they're safe. Like I said, I don't think any of the big five are going bust anytime soon. And even if they did, the government is going to bail them out. But at what cost will that be to inflation and all these other things? We'll have to wait and see what happens.
Well, I was in a room with some people, and again, I'm not into the commercial space at all, and lending and all that stuff. I just hear what I hear as a regular citizen here. But I did hear them say, like, this time and in the last 5 to 10 years, like, the banks did get into the lending, development lending and this kind of lending, where before they didn't go through the big banks, right? It was that they didn't fund those kind of projects, but this time they did. And why they're doing all that, those blanket appraisals, and they want to see them succeed. So the banks are literally propping up, and we still see them, a lot of them go under, but they're from smaller developers, or developers that haven't teamed up with the banks. But it's probably a smart choice by the developers teaming up with the bank, because the bank's literally keeping them alive and inflating values. But so they're inflating these values of these units to a lot higher than they should be, 20% higher in most cases, or in many cases. Someone's buying this, and they're inflating them for end users, or for the speculators or the purchasers. But so these people are immediately underwater. So just think about all the bad loans that the banks are going to have on their books when it comes to these condos, and they're not going to be able to. So their plan is to wait it out. We're just going to wait it out for like a decade, and then then they'll be even, and it's still risky. It's craziness that, and this is just, again, it's more of this kicking the can down the road BS. And we've been doing this for however long, and they're just still doing it, and they're just going to come up with new ways to do it. But it's like a lie. Once you start to lie, that lie just turns into all these other lies, and this is what's happening with the banking system and the real estate, everything. It's nuts.
No, it really, really is. So I'll move on to the average sales price of condos now. Again, so they took out that blow off top, they went down, and have they hit a new low? It's kind of hard to see on that chart.
No, the data's right beside it there. Yeah, so 628 is the average price. Well, look at like 2020, it was like 550 or 563. We're like not that. We're like what, 10% or so above like 2020 prices when it comes to condos, and we're talking resale condos here. Like the pre-construction's a whole different story. But so yeah, you look at, and this is what I was talking about, comparing freehold to the condos. If you look at the condo compared with 2021 for June, it was higher by $6,000. So it's the opposite. So condos are a little bit higher than they were in June 2021, and freehold was about $8,000 lower this year than they were in 2021. So and this is what people don't understand. It's the both charts look the same, and I pointed this out, and it was to some other whatever social media people that are online on X and stuff, and I've heard it since last year. Like when I talk, and they'll say, well, separate the condos from the freehold, because the freeholds are invincible and nothing's going to happen to those, and they're resilient, and because freehold's more, it's rare, and they're not building them, and I did that, and freehold was worse in almost every metric. Again, we have the condos, which are like rock bottom sales, and they have fared equal or a little bit better than the freehold has. So again,
This video was powered by ExpressVPN, helping you protect your privacy with the world's fastest VPN and the VPN that I use. If you want to take advantage of my special offer, go to expressvpn.com/marketmania. Let's get back to it.
So again, this is not about condos, this market correction or crash. This is about everything, right? All real estate. And so there you have it. Condos, again, they're showing new lows this year for most months. And actually, if you look at May was lower. 2025 than 2021. And so was April, so was March, and then not February or January. So we're definitely seeing like every way you look at this data, it just keeps showing like it's not like, well, it looks like it's getting better when you look at this. No, everything you look at shows it's getting worse. Like it doesn't matter how you dice the potato, it's just it comes out the same way at the end of the day, right? And again, looking at take that blow off top, we've been trending sideways, and we haven't really seen a crash because we haven't seen the circumstances for a crash, right? We haven't seen the environment for a crash. We're seeing, unemployment is, and of course they're adding public sector jobs, and they've come up with new tricks, right? Every cycle, and of course they learn from the last one, but they learn how to mask it, how to prolong it, and this is what they're doing. They clearly, looking at this data, they've done a good job prolonging the thing. Even like you think back to like what Chrystia Freeland announced like last year, it's like, hey guys, like I got a solution. Just go, instead of borrowing $1 million, borrow 1.5 million. Borrow money to build a shed in your backyard, like, and call it a granny flat or whatever. Like they're just like these are all the tricks of the trade, right? That they're using 30-year mortgages for first-time buyers or whatever, right? It's just like everything. And so they have been propping up this market, and but it's not working.
Yeah, no, it isn't working. And again, like loads of inflation happened during 2022, 2021, 2023, and it's like, yeah, this has just trended sideways as well. So it's pretty much like it's going down. And the condo market seems to be where the most denial is. And I wonder whether that denial, the fact that people aren't cutting their prices that much, is really just because they can't afford to, like, and that's going to turn into just more distress in that area of the market, because as we've said, like, who is going to buy all these shitbox condos that are coming online that are like 400 square feet?
The smart people get out, while you can, sell what you can. And I don't even know how people can believe that they're going to stick around and wait until the spring. Like, I haven't heard anyone really this year say, I'm going to wait until the spring. Like, I'm sure maybe in the fall, once the fall hits, they'll say it again. But like every spring has been worse. Looking at the data, it's like lower. It gets lower highs every year.
Yeah.
So yeah, no, they really have to come to terms with reality. And like, if you need to sell an extra property, or like, take the loss, get out. It's just going to get worse. Like, I have these conversations every day with people, and the offers, oh my God, like, they say the first offer is the best offer. And I like almost every seller, you'll get an offer and, they're like, wow, this is low. And then you can negotiate to somewhat. If they don't deal with that offer and accept it, it will be lower. And it just like not just a few thousand, it gets lower. And the offers are just like, and then sellers, or sort of the buyers, know that these sellers are sitting ducks. So they need to negotiate and like get the sale done and get out. It's like, don't mess around. Things aren't going to change anytime soon. Actually, someone just told me today they heard 2026 was going to be things was going to be booming again. Actually, I don't think so. It's like 2026 is going to be, it's going to be like we're looking at like bottoms in like 2026 or 2027. Like we're not even close. And I was just like laughing, and I don't know who told, like, people just tell you things, right? They'll say, and it's just talk, right? It's like, Bitcoin's going to go to 500,000. It's like, okay, all right. Do you got any data to back that up? And they're like, well, no, it just is because there's nothing else, and blah, blah, blah. And it's like, do they do it with real estate? Real estate is going to, and I say, okay, like, where, like, well, our boss said it at, one of the brokerages or whatever. And it's like, no, the boss wants it to go like that, but it's not going to happen. Like, but they had never have any data. Like, give me something, give me some proof, right? Like,
yeah.
It's I've never seen proof.
Yeah, no, that's so true. And then this is the condos days to sell, and it's also trending up, which goes with all the other data.
Yeah, let me see here. Condos dates to sell. Looks like destination that's what that is.
Yeah,
like the Aussie man would say. Yeah, look at the days to sell. They're up and up. I just don't understand this. 38 days to sell a condo, but look at 2020. So 2020, you have like 20 days. The pandemic, 25th, 25 days in May 2020, 21 days to sell in May 2020, in April 2020. And look at this year, 38 days. So I want to really put this into perspective. So people in condos, and even June, July, everything, this is during the pandemic. So I don't know if anyone knows this. I'm sure you do in Toronto. So during the pandemic, if you lived in a condo in Toronto, and this is not just about the pandemic, this is like long term, you should like really keep this information, close to you. So I remember listening and hearing all these stories from people that during the pandemic, you could only allow 3 people in these elevators in the condos because of social
Oh
distancing.
my
So it would take you
God.
like 2 hours to get out of your building or whatever. It was like crazy. And that's why people were like, I'm leaving, like I'm out of here. They loved it, right? They went to the suburbs. So you literally had to wait like an hour to 2 to go walk your dog during the pandemic. And the days on market were only 21 to 25, and now they're 38, and you can get them. And nobody's living in these things. You don't even have to wait for the elevator. It's there's nobody in there, and you're
Oh
paying,
my
and
gosh.
it takes almost double the amount of time to sell the thing. So look at even 2021. Like look at the days on market, days to sell average in 2021. Like it was in the
Yeah,
teens.
low. Yeah.
And
Yeah, really low.
and now you're 38 days on market. Look at January this year, 47 days. Is that a
47,
record?
yeah.
That's a record out of all of them.
Oh
47
my
days,
gosh.
and to get into a shoebox that you can't take, the building could be on fire and you're gonna be waiting for the elevator.
Yeah, yeah. And that says to me, what do you think of that? Because it says to me that, like, again, a lot of the sellers are in denial on that and they're not prepared to take the price cuts. That's why it's trending up, because there's a huge amount of supply and there's still some sales going on, not that many.
Well, I just wouldn't want to be them because the carrying costs, right? There's
Oh,
so
they're
many people like that.
ridiculous.
The cash flow, the negative monthly cash flow is just killing them. And then you got the condo fees, and like it's like the condo fees are ridiculous, and the property taxes, and they're in denial. Like we are changing. It takes so long for these cycles to change, but we are changing slowly from this denial phase to this fear. But the smart people right now are getting out if they can. Some people can't get out. You're like, okay, I don't have $200,000 to pay the bank to get out, or
Yeah.
100,000. You literally have to pay them. So what's your choice? Sit there paying negative cash flow every month, or just like say screw it and just like walk away and stop making your payments. But there's no other way to do it. So yeah, I think that for the people that can get out. But for the people who can't, I honestly don't know. I don't want to give them bad advice. Like, what are you gonna do? Walk away? Just leave? Jingle
Yeah.
mail?
Well, I mean, that could be coming down the pipe. More and more people are losing their job and then they're going to be forced into it. Yeah. I mean, how many people can afford to take a hit of like $100,000, $150,000? Like, not many, I don't think. Yeah, it'll be a total disaster for them, really, and to a certain extent. If there's a lot of that happening, are the banks really likely to pursue every single one? Again, I don't think so, because the courts would just be clogged up with cases, because obviously the banks can go after people beyond what they paid or what they owed if they don't pay it back. So it's going to be real interesting to see what happens over the next sort of 6 to 12 months, because I don't think that the unemployment rate's going down, and I don't see any economic boom on the horizon. In fact, like, now you've got the anchor of like the global economy going into a recession. I mean, Canada's been since 2022, really, because of the amount of debt. But other economies now are just being, the interest rates are finally hitting. They hit so fast in Canada because there was so much debt, right?
Well, that was just like a reaction, that wasn't the fundamentals of the interest rates hadn't hit, because it takes like 12 to 18 months for those to take effect. It was just like, whoa, this party's over. Like someone just like literally unplugged the stereo and it was just like, it's over.
Wow, yeah. Well, yeah.
And now, what we're seeing now, like what I'm seeing on the ground here with sales, like when things are on the way up, right? Like a house was, X number of dollars, $700,000, the sales would support that. So you look at the comparable, and that's what the appraisers do. They say, okay, let's look at the comparables for the same houses. Okay, 700. Well, I'm paying 725 because I really want this house. And so you're, and it's not like this, the buyers weren't really complaining. They were like happy that they got the house, but there wasn't that sense of defeat. It was a victory. They're like, I got the house, right? Like, and all these other people, and that's great. But on the way down now, it's a lot harder psychologically to do that. So, but I'm doing it like with my buyers. Like it happens like just in the last 2 weeks, like 2 different buyers, we set new lows or new, yearly lows on these types of properties. And, but like the seller's like, well, like the closest sales this price, 700,000. And we're like, well, we're giving you 670, like our max is 675. And they're like, well, like, no, like the other one sold for this. Yeah. But on the way up, they were selling for that and you got more, but now they're the opposite. And it's so like that discussion is so much harder because who want, like, how do you justify a house house being worth less. And so then I always, I'm a numbers guy, so I have the comparables, and I've literally told two agents, like, again, and probably within a week, but in the last couple of weeks, we are hedging ourselves against the market because it's going down, and we're not paying you what the market said it was within the last 3 months because it's going to be worth what we're paying in the next 6 months. So like,
Yeah.
I have nothing left but just to say, like, because usually you'd say, like, here's the data, this is what it's worth. So I say, here's the data, this is what it's worth, and you're also getting 5% less because the market's trending that way, and they bought it both times. They freaking sellers bought this, and my buyers got the properties, and so we like set like these new records on the way down, and so the other people are going to see these sales when they go to sell one, and it could be within a few months, and they're going to say, well, look, this everyone else got this much, but I just saw one sell over here for under that, and that's what it needs. But I guess my point is, it's so much harder to bring prices down than it was to bring them up. And this is why we're seeing this slow trend down, and until like something like catastrophic happens in the economy, and we haven't seen that yet. But again, prices are still going down just because of the downward pressure, and the fundamentals are returning.
Yeah, that's true. Yeah, because you've seen unemployment that has gone up, like the economy's worsening, but it's also like barcoding kind of the same as real estate. Like the trends are kind of just going sideways instead of skyrocketing upwards. And that's really but you are seeing a lot of like the statistics that Equifax publishes and TransUnion are saying, like, yeah, a lot of people are defaulting like 100% more than the last year. So that is really jumping up, but they're still at fairly low levels now. But it will be interesting to see what happens with that, because that data is so laggy as well. I think we just had like Q1. So we're in Q3 right now, and we had Q1, which was literally 3-4 weeks ago in June. So it's kind of crazy how it's all unfolding. And I think it's really going to be interesting to see how the economy also takes the fact that this immigration bubble, it looks like it's bursting right now. And especially like I saw international students, which was a big component of the immigration bubble. And that's down like 70% when you take into the fact that a lot of the study permits that got renewed this year were people that were already in Canada. So they're not like adding anything to GDP, to the economy, whatever you want to call it. So it's and a lot of that has kind of fudged the numbers. And I'm pretty certain that Canada is in an official recession right now. And most economists believe that as well now. But like, what does that even really mean? Like, what does it mean to the average person when you're in an official recession? Like, people's wages have been stagnating for years, if not going down. The price of everything has gone up. That hasn't come back down. It's just like a disaster for the middle class, essentially.
The price of everything is still going up, right? It's like So like when we look at I look at condo documents when someone's buying a condo, and I don't sell too many condos, but again, these are like townhouses and stuff around here. But you review the status certificate and the condo docs, and I look at the reserve fund studies because they're required to do a reserve fund study every 3 years or so, and all of them have these like 10% increases into 2026 and 2027 until they go back to 1.75%. So like, I think the 2026 was the soonest I've seen like these big increases stop. But I just saw one the other day that was 2027. So they're lagging behind because they get their bill from, the landscaper this year and it's gone up, but then they have to book that in for next year. But these things are all hitting now, and they're still hitting. So like, the real inflation is still hitting, but it won't be shown in a lot of things because you're going to have deflation and other things, right? So, but there's still these services and a lot of things that are inflating right now. So,
well, yeah, and that's the thing. Like, the government can come out and say, "Oh yeah, inflation is 2%." If you look, you're like in the condo board, and inflation is really actually like your costs are rising 8-10%. You have to increase the fees by that much. So that's why I always say, like, what does it matter to people what the government tells you inflation is. Like, your inflation will be different to mine and vice versa, and it goes the same for different businesses and things like that. Like, there's no way that inflation has been at the levels the government has said. You really have to double it, and if you look at shadow stats, they do that with the US data, and I think that's really good. They actually use previous measures that were more accurate in the 80s and 90s, where they weren't meddling with the components of it all the time. It's like, I mean, the great example of it is when the used car bubble happened. We all remember that. Then they added the used car sale prices into the CPI after they missed all the increase, and now they're gonna like have all the decrease in that, weighing it down. And it's like, man, it's just so, it should be a fixed basket of goods at least for one CPI, just so that you can track it. Because how can you track something over time where the components are constantly changing? It's impossible.
No, it's
impossible.
Craziness. Look at property tax. Like, I think like most places had like 8 to 10% increases in property tax this year. Like, there's still, and it's gonna next year it's gonna be the same thing. Insurance now, I've heard a lot of people talking about this in Ontario, but like they're talking like their insurance went up like 40% for their car insurance. So, and I haven't got my renewal yet, but I'm going to be watching that and reporting on it if it does go up that much. But so you're paying $1,200 a year, and it goes up to $1,800 or whatever, right? It's like going up massively, and of course you got all the taxes and the HST on that, which pretty much almost puts it at 50%. So
yeah, and it's just more expenses that are like necessary for households, but you know, how can they afford to take these increases? Like, they have to take money away from somewhere else then, and then that filters into the economy, and you can just see that's happening more and more. And people aren't going to be getting these wage increases now in the current state of the economy. There's no way. So again, like, it's just rubber is going to meet the road at some point. I think it already is right now. Like, I think the economy is definitely in a technical recession, even though I don't like that bullshit term. Like, I've been saying, it's been in recession since 2022 because it's been going backwards, not forwards, especially if you take away all the population growth.
Well, and that's why like Carney is, added all this extra spending, but he's shifted some things around, so it looks like he's spending less here and there, and this is not. And then he divided it into two categories now. Like, he's crafty, right, with how he's doing it. But yeah, there's just even in the States with Trump, like, and that's what the big row was with Elon and him, was like Elon came in to cut all this waste, and then but he has no choice to run a deficit and to borrow money, or else it's just going to be bad and the economy is going to go into recession. But every politician is just trying to avoid this. Yeah, like, what's going to happen? It's inflation or recession. It's one or the other, right? So, and that's where we're going to end up. And I think that inflation probably won't go away for discretionary things and household spending, but it will come out of real estate, because real estate's obviously deflating, and in real terms deflating a lot more than nominal terms. So it remains to be seen what's going to happen. But the governments, they're playing their tricks and spending whatever they can and trying to hide it from the population.
Well, yeah. And people know as well, like, the moving away from China manufacturing, that is going to be expensive. I mean, we've already seen with the elbows up nonsense, like the cost differences between Canadian products and US products, even with all the tariffs. So how do you think that's going to work with like Chinese stuff going back to the US? Like, that's all just going to be inflationary in the future. Right now, there's no money for that. But I mean, they want to raise their prices. Like, you hear it from all the major CEOs like McDonald's and other places, like, their costs are still going up. They want to raise prices, but people can't afford it. So they're like, we can't do anything. So they're just waiting. As soon as that money printer goes on, stimulus checks start flowing out, then that is all the prices of everything.
Sorry, the Canadians, I'm pretty sure you're going to be living in a Chinese home soon, because like these prefab, well, it's true, these prefab homes and these modular homes, they are coming. Like the container homes probably aren't going to happen, because those are like literally shipping containers, but like they're modular homes that they're going to build in factories. I guarantee you, so a lot of that material is going to come directly from China. The only reason we don't have Chinese cars in Canada is because of our automotive industry, and it would kill it. But they're pushing for 20% electric cars next year, and like electric car ownership or purchasing is on the decline significantly. But like, if you need electric cars, why don't you get them from China? They have lots of electric cars because it's going to kill the auto industry. But the housing industry, it's different, right? They don't care. They just build them. We don't care what they're built of or where they're built. Just like build them in a factory or whatever. And let's just try to overcharge these Canadians $500,000 for a 1-bedroom modular and put them on a lifetime mortgage on leased land. But it's going to be made in factories with bought from China. Like most of the stuff that you get, or not most, but a lot of the stuff you get in homes is made from China, like the light fixtures and like all this stuff.
Oh yeah.
But it's going to be more and more because they're not going to be able to build them with Canadian-made stuff. So you're going to be like, you already are living in a Chinese home, like it's all your furniture and your clothes, and like it's just going to become more and more because we can't afford to make it ourselves.
Yeah, it's so true. And you know what? Like, it's funny with the tiny homes thing, because like I've seen all over Canada, like some of these new subdivisions, some of the small detached, especially the laned homes, they look like tiny homes. Like they're so close together, and they've maybe got like this one tiny window in the front. Like they're not big at all. I think we've actually discussed it on previous videos that we've done together.
Yeah, and you can buy like modular. You probably see that too. Like they'll be like buying like freaking, those Amazon freaking homes that you can buy. You can get them in the States actually, or like you can buy them from like Home Depot and just like insulate the sheds or whatever. I guarantee you're gonna see some of that. Like people will be buying these homes, or the government will probably be buying the homes from China, getting them shipped over, and then constructing them in the factory, and be like, "We look at these constructed in the factory here." Like it's like the apples. The apples. I'm like, so I go to Walmart and the apples are product of Canada, right? And I called the guy over. He was like an Indian student. Get over here. Look at this. What is this crap? I'm like, look at it. It says Chile. The apples are from Chile, but it says product of Canada. And then they have bags of apples, the same ones. And then I go look, and he goes, "Oh, look at these ones. They're from," the little sticker says Argentina, but then it says product of China on the frickin', like, I'm like, it's because they like put them in a bag or they put them in a box, right, in Canada, and they're like product of Canada, because it's a product that wasn't grown in Canada. So that's what they're gonna do. They're gonna say you're gonna get this home. It's gonna be like, shopping at freaking online for it, and it's gonna say product of Canada, but it's gonna be all Chinese parts and imported, and they're just gonna put it together here.
Yeah, no, I totally agree that that's probably going to happen. Listen, John, I know you're strapped for time, and I want to thank you so much for spending the time to come on the show again. It's always great to chat with you, and I know the audience absolutely loves you as well. Have you got any final words of wisdom before you go here?
Yeah, I think I'm going to go back to my story, what I was, talking about when on the way up, when prices go up, you're paying a little bit more. So don't be scared to pay a little less, and use the excuse that, yes, all the other homes sold for whatever, 700,000, but I'm giving you 675 because the market's on the way down, and you need to hedge yourself. Like, you're just keeping prices elevated, and someone else is going to negotiate better. So you might as well, it might as well be you. So yeah, make sure you negotiate strong when you're purchasing a home. And on the other side of the coin, sellers, you got to sell because it's not your market. Take what you can and sell that thing.
Yeah. Well, you heard him, guys. Listen, John, thank you so much for coming on here again, and thank you everybody for watching this video. If you've enjoyed this video, you can check out that video there, and I will see you guys in the next one. Take care.